All right, what is happening in the crypto market right now is fascinating because it's telling two completely different stories at the same time. On one side, you've got this widespread fear that's shaking out all the weak hands. But on the other, Wall Street is making some absolutely historic moves behind the scenes. Okay, let's dive into this massive tug of war.
And yeah, let's start with that fear. The Crypto Fear and Greed Index is sitting at just 28, which is deep in fear territory. And this wasn't a slow drip, it was a dramatic plunge. A direct result of a pretty brutal liquidation shock that has seriously rattled the market's confidence.
So this brings us to the million-dollar question for today's explainer. With sentiment this low, is this a huge danger signal telling us to run for the hills? Or, and this is what the index was designed for, is this actually one of those rare buying opportunities that only shows up when everyone else is panicking?
Now, before we can even talk about opportunity, we have to really understand the fear. So let's break down exactly what's driving this negative pressure in the short term.
And what's really striking here is just how fast everything changed. I mean, just last week, the market was feeling pretty good, sitting at a greed score of 70. Now, in just 7 days, we've swung completely to the other side of the spectrum. It's a textbook example of how quickly market psychology can flip. Right now, every single eye is on Bitcoin, which is trading at around $111,200. And this support zone, right here between 107 and 110K, is the battleground. For the bulls to stay in the game, Bitcoin absolutely must hold this level over the next 24 to 48 hours. If it breaks below, we could be looking at some serious downside. And it's not just stuff happening inside of crypto. We're also facing some pretty big macro headwinds. You've got President Trump confirming a trade war with China, a lot of uncertainty swirling around BNY Mellon's upcoming earnings. And critically, the spot Bitcoin ETFs are seeing money flow out. That's a direct measure of institutional demand drying up, at least for now. Okay, so that's the fear side of the coin. But now, let's flip it over. Because while that short-term picture looks pretty shaky, some of the biggest players in traditional finance are making moves that could literally change the entire game. The institutional floodgates are definitely creaking open. And this is just huge. The SEC Chairman Paul Atkins came out and said that creating clear rules for crypto is now a top priority. For years, the #1 thing holding big institutions back has been regulatory uncertainty. This statement, it signals a massive shift toward creating a stable, predictable environment where serious capital can finally feel safe to enter. And if you want proof, look no further. This is a genuinely historic moment. CME Group, we're talking the largest derivatives exchange on the planet, just launched options for both Solana and XRP futures. This is not just another product listing. This is a massive stamp of legitimacy for top-tier altcoins, and it could unlock an enormous wave of institutional money that goes way beyond just Bitcoin and Ethereum.
And the market's reaction, it was immediate. In just the last 24 hours, you can see Solana jumped almost 6% and XRP is up nearly 3%. Now, this isn't just random market noise. This is a direct positive reaction to that CME news. It shows you exactly where capital is starting to flow, toward the assets that have these clear institutional catalysts.
And the drumbeat of good news just keeps going. Erebor, which is a crypto bank backed by none other than Peter Thiel, just got conditional approval for a federal bank charter. This is another major step forward for what we call institutional DeFi, which is really just a fancy way of saying we're building regulated, bank-grade financial services using crypto technology. It's another powerful bridge being built. So all of this brings us to the core thesis of this whole explainer, what I'm calling the Great Disconnect. Right now, we are witnessing this powerful clash, a real tug-of-war, between the fear that you can feel day to day in the price action and the massive structural changes that are happening right underneath the surface. In this slide right here, it just lays out the entire conflict perfectly. On one side, you have all the short-term negatives, the low fear and greed score, the pressure on Bitcoin's price, all those macro risks. But then you look at the other side, and you see these powerful long-term positives. CME legitimizing major altcoins, the SEC finally pushing for clarity, and institutional-grade DeFi actually becoming a reality.
So how in the world do we make sense of this contradiction? Well, a fascinating report from Fidelity Digital Assets suggests we might be entering what they call an acceleration phase. They think this could be the final explosive stage of a bull market. And guess what? It's typically characterized by exactly what we're seeing right now: extremely high volatility and this battle between old fears and new realities.
Okay, so given this wild, volatile, and frankly pretty confusing environment, having a clear strategy is more important than ever. So let's walk through a disciplined way to think about this landscape. And of course, this is just a strategic framework, it's not financial advice.
So, how do you navigate this? It really boils down to discipline. First, with volatility this high and the fear index this low, using high leverage is just asking for trouble. Second, it's probably a good time to prioritize quality, focusing on blue chips like Bitcoin and Ethereum. And third, if you are looking at altcoins, it makes a lot of sense to focus on the ones that have clear, tangible institutional catalysts, like that CME news for Solana and XRP.
And speaking of those catalysts, it's pretty wild to see where capital is rotating even in this fearful market. We're seeing these little pockets of strength. The business service sector is up a staggering 250% in the last day alone. We're also seeing significant money flowing into sectors like decentralized AI, or DeFi, and specific AI projects like Chain Opera. It just goes to show strong narratives are still attracting capital.
So let's wrap this up by looking ahead. This tension in the market, it can't last forever. Something's gotta give. And there are several key events coming up in just the next day or two that could be the trigger that finally resolves this.
So keep your eyes on these. On October 17th, we've got a key U.S. Senate vote on the Genius Act. This is going to be massive for stablecoins and, by extension, Ethereum. Then there's the big one we're all watching for, any news on the U.S. Strategic Bitcoin Reserve, which could be a $14 billion demand shock. And finally, the CFTC's comment deadline on October 20th will give us some vital clues about the future of crypto derivatives in the U.S.
So let's bring it all together. The defining feature of the market right now is this deep conflict between short-term, retail-driven fear and long-term structural adoption by major institutions. It creates a challenging, volatile environment for sure, but these are precisely the conditions where real opportunities are so often found.
And that leaves us with one final fascinating question. With institutional-grade products from the world's biggest exchange now live for both Solana and XRP, the race is officially on. As that big money continues to flow in, which of these two do you think is going to explode first, Sol or XRP? Drop your thoughts below. I'm really curious to see what you all think. I'll catch you in the next one.